It's Halloween, and so far it's been a pretty scary earnings season. Investors have more important things to worry about than zombies, of course, so it might be a surprise to learn that October is poised to be the 5th up month in a row for European stocks, a bull run not seen for 6 years. I'm Jamie McGeever, and this is today's Market Pulse. So, slender gains for European equities today, but a couple of stock prices on the slide catching our eye in today's Market Snapshot. Barclays down around 4% after it reported a 23% slump in pre-tax profit to £1.03 billion in Q3. That was down to a £700 million charge for mis-selling payment protection insurance. The bank also unveiled 2 new US regulatory investigations. And shares in ArcelorMittal, the world's largest steelmaker, also down around 4%. It reported a net loss in Q3, slashed its dividends and scrapped its Q4 outlook because of very challenging conditions. Not a good sign then for the world economy. Well, that's how stocks are faring up today. What about FX? Here with me now is Reuters' very own Neil Kimberley. Neil, stocks in their best run for 6 years, if you take a month by month. And in FX, implied volatility in euro-dollar options is lowest in 5 years. That's a sign of complacency, no?
I think there's a number of issues here, Jamie. In the first place, I mean, you just mentioned it, stock 6-year uptrend, 4% move in Barclays today, 4% move in ArcelorMittal. I think euro-dollars moved 0.36%. If you're a hedge fund and you're looking to make some alpha going into the year end, and a lot of hedge funds, book closings are coming up either today or in the next couple of weeks, why would you waste your time punting euro-dollar, which has been 128, 132 on the very wide since the beginning of September, when you've seen these sorts of moves in stocks? You're going to be putting your money where the volatility is.
And it's not in FX.
And it's not in FX. It's quite possible that the market has got fed up of selling the euro. Mr. Draghi has come out and said he's going to do whatever it takes. Super Mario, he's there, he's got the cape, he's flying around. The market doesn't want to take him on. They're moving on to something else. And at the moment, it's not euro-dollar, and you can see it in the volatilities, because you'd assume that if anybody takes the big view on the euro at the moment, the first place you're going to see it is in the options market rather than cash.
So what do you think then? Is this a sign that the crisis is over, or are investors too complacent?
I think there's a degree of complacency. As we're coming on air, there's talk that the Spaniards may not even ask for any money until 2013. But the thing is, we've been here all year. We're kind of bored with the same old story, and we've got the Draghi put now. We know he's going to do whatever it takes. At the end of the day, is there easier low-hanging fruit somewhere else? Just leave it alone for the time being. And there's also a big 130 option expiry today, and that's killing the market.
OK, well, it's not all stagnant in FX, certainly on the euros, because today Euro-Norway is a big move lower in Euro-Norway, obviously strengthening of the Norwegian crown. What's driving that?
Well, we had decent retail sales numbers, but I think the key thing was the Norwegian central bank's come out and said, you know what, guys, those Norwegian krona that you thought we were going to sell in November, well, I'll give you a clue, we're not doing it till December. All of a sudden, you've got Iran in the background, you've got the uncertainty of the US election, you've got a very cold winter. What better place could you put your money than the Norwegian krona? It's understandable. Now, I'll put my hands up. I'm a one-way trader on the Oslo. I love the Norway, so I'm always going to be this way anyway.
And a chart here showing that your targets are very much to the downside.
Yeah, it's basically Ichimoku cloud was 737. We bounced off that. We're around 740 coming on air. But if we get through the base of that Ichimoku cloud, I've got 734, and then below that 726. If we hit 726, Jamie, I don't think the Norges Bank's going to be quite as complacent about this as they would suggest this morning.
Indeed. Let's finish up with Euro Swiss and the SNB. Now, the Swiss National Bank reported a healthy 17 billion franc profit in the first 9 months, a big turnaround from 2010 when it reported a 27 billion franc loss.
Jamie, that's a better turnaround than the Arsenal last night at Reading, mate. 4-0 down. What can I say? But at the end of the day, there's a couple of issues with this. Obviously, a big profit for them. The cantons will be happy because they might get a dividend this year. Second thing is they've rebalanced the reserves. Previous results, 70 to 80% were in euros. Now we're down to about 55%, I believe, as the data is showing. That is closer to what Switzerland's trade profile is. Therefore, if the euro Swiss were to go down again, the Swiss National Bank could come in and buy euros, knowing that they can build from 55 to 80 rather than go from 80 to 100. It's a much better position. There's 2 issues to this. If they're far better balanced than they were now and they're happy with the situation, does that mean the purported SNB offer in euro-dollar on any rally is no longer there? Does that mean the euro can go up? Because Asian central banks have been buying dollars against local currencies. There may need to be some recycling. Secondly is, UBS have said, well, we know what UBS are doing. They're downsizing staff. They're also reducing their risk ratings. That, to me, having worked for a Japanese bank through the 1990s, which were going through the same process, generally means you go home. And if you go home, you mean you've got to buy some Swiss francs, Jamie, and all of a sudden the SNB might have to buy some euros again.
And the whole thing starts again.
And off we go again.
Happy days. Neil, thank you very much. Before we go, there's an anniversary to mark. Mario Draghi, Super Mario, has today completed his first year in charge of the ECB after taking over from Jean-Claude Trichet. It's been a tumultuous 12 months. He began by reversing his predecessor's rate hikes and went on to promise that the bank would do whatever it takes to save the euro. And believe me, he said, it will be enough. There's some way to go, of course, but so far, he seems to be on track. That's all from us for now, but join us every day at this time to take the pulse of the market. I'm Jamie McGeever. This is Reuters.